Quick disclaimer, this is not financial advice. Trading forex is risky. Don't be an idiot. Use risk management. Enjoy the video. Hello guys and welcome back. Today I'm going to be going through a day's backtesting on EURUSD using my 1 minute order block scalping strategy, which ended up producing a profit of 10R for this day. Obviously these aren't trades that I've taken, but this is the backtesting that I have done for this day. This is an incredibly simple but profitable strategy, and if you haven't seen my video covering it, I will leave a link to it in a card in the top corner now. I was actually away on holiday this past week, so I haven't been trading, haven't seen the charts at all, but I am slowly working through backtesting the strategy day by day on the past week's price action. So let's get into it. I've already gone through and conducted my backtesting and placed my positions off camera, so instead of playing price action through the day like I normally do, I'm just going to explain the reasons why I placed each position when I was backtesting earlier. So what I noticed when the market first opened is obviously we've been consolidating throughout the Asian session as we normally do, but then right as the London session began, we had these impulsive moves up that sort of broke some structures to the outside. We pushed up here, came back down, and then pushed above again, showing that price was looking to go bullish for me for the beginning of the day. I identified this final down candle here and set that as my entry. So using this strategy, if you go and watch the video, you'll see, placing my entry at the top of the order block that I've selected with my stop loss at the bottom, and then aiming for a standard 1-to-3 risk to reward ratio. As you can see, price did this sort of impulsive push up, slowly wiggled its way down, consolidated a bit, and then came down and tapped us in with a wick, and slowly moved on to the upside, giving us our 1-to-3 that we look for. Now, again, with the strategy, it's all about sort of, you can put in your own risk management really. I like to go for my set 1-to-3, but obviously does give trades the potential to run a lot more. Obviously this one ran to nearly 7R. But yeah, taking that as 1-to-3, so that's 3R up for the day. So the next trade that I was looking to take, obviously, so price sort of moved up here, pulled back, pushed up again, breaking more structure to the upside, sort of made relative equal highs, didn't break above this structure, but price was still looking pretty bullish to me. So as you can see, we came up here, made these highs, slowly went down, had this sort of consolidation here where we created some liquidity, some equal lows, which sort of validated that perhaps I'd be looking to take a long position from this final down candle here, which, as you can see, if set, came down, tagged in, pushed up a little bit, but then straight through to the stop loss. Price now looking to go bearish, so that would be negative 1R there, leaving us at 2R so far. So as you can see, it would have been really good if when I was backtesting, I had sort of seen this as perhaps looking to go bearish because price continues to drop to the downside. Now, I'll just a quick little interlude. When I do my backtesting, I do it on replay mode, so bar by bar. So I'm going by what I'm seeing when I do it bar by bar, rather than looking at the entire picture of the market and just cherry picking some examples. So obviously there may be things on here, there may be examples of short trades that you see here that you might have taken in your backtesting. Totally fine. When I did my backtesting, not how I was looking at the market, but I like to backtest my day as if I was sat trading it live and give you some realistic backtesting, I guess. Anyway, so as you can see, price drops very strongly off to the downside, not really giving many opportunities to enter at all. I guess in hindsight now, you maybe could have had an entry around here, but price action was looking a little bit choppy. Anyway, continues to drop to the downside. We move down and we come down to this point, and that's where we sort of start to get this bullish move upwards. We come up, come down, make a higher low, so we've got a sort of a bit of a change of character in the market here, and then come up and break above this little structure that was formed here. What I then also did go back and look and notice was when price came down to here, if we go back to the Asian session, price is reacting off of this reaccumulation order block right here, sort of giving strength for the bullish trade idea. So considering that we've broken above the structure, I was looking at quite a large entry of 2.9 pip stop loss, but entered off this final down candle here. Price comes down, tags us in, and then shoots through our 1-to-3 profit target. Now again, beauty of this strategy is, depending on how you use your risk management, if you leave trails to run, you could get incredibly high risk to reward ratios, as could potentially be seen here. Obviously, the way I'm trading it at the moment, I take my 1-to-3 and I get out. I do occasionally, when I'm trading it live, like to leave a bit of my position on, but when I'm backtesting, I'll just go for my standard 1-to-3. So anyway, we do that. price sort of consolidates a bit and then continues to shoot to the upside. Then we get up to here, which is where we sort of start to see price action start to slow down a little bit. We come up here, consolidate, and then we sort of come down and we break between these little minor structures formed here, telling me that perhaps price may be looking to go ever so slightly bearish and have a little bit of a pullback. So placing our entry on this sort of final up move candles here with our stop just here at the high of this wick. Price comes up, tags us in, shoots down for our 1 to 3 again. This is the beauty and the simplicity of this strategy. Because you're trading it off of the 1 minute chart, your stop losses are low, you don't need a massive move in the market to reach your targets. And what I found from my back testing and from working through the statistics and stuff is by going for your 1 to 3 with the win ratio that this strategy provides, it still remains incredibly profitable. So we smash through, get our 1 to 3, come down, price continues to go up, so price looking very bullish at this point. Don't really see a whole load of opportunity for entry at this point, but we get up to this area here where we start to consolidate a little bit. So we come up here and we have this sort of pullback and then this very, very impulsive move to the upside. I really like this area, this final down candle here, because of just how impulsive and bullish this move to the upside was. So price comes down, consolidates, tags us in, reaches our 1 to 3. Now, I would have actually probably been expecting a more bullish continuation here because of how impulsive this move up from this point was. However, as I just said, because you're only looking for what, 8.4 pips out of the market, it really doesn't matter whether it does or not. So that would be another win down the belt if you had taken that trade that day. Then price comes up, consolidates, and pushes down and breaks beneath our order block area. At which point I'm thinking, okay, maybe price is now looking to go bearish. We're going to distribute a bit, maybe have a pullback to the downside. So I then began looking at this area here of this sort of consolidation order block, looking to perhaps get a short trade. As you can see, price comes up, tags us in over here actually, does sort of go down into profit a little bit, maybe 1.5 R, but then as we near towards the end of the London session, price does come and tag us out. Now, I normally wouldn't actually take a trade this close to the end of the London session, but I wasn't actually thinking about it when I did the back testing, but I'm leaving it in anyway because I wanted to show you what I was actually seeing when I was back testing and not just cut out bad examples, because there's no point in doing that. I'm not here to mislead you. But anyway, I would then stop trading. Well, I probably wouldn't even be trading for this whole day. This is if you were to be sat down trading for the entire day, but I would not be trading this strategy once the London session ends and we move into just the New York session. So if you look at that in perspective for the entire day, so we have a loss here and a loss here, so that's negative 2R, but then we do have 1 win, 2 win, 3 wins, 4 wins. So that adds up to a total of plus 10R if you had taken all of these trades. Now, as I said, if you go back and back test, depending on how you see an order block, how you like to validate your trade ideas, you may come up with totally different trade ideas for this day. And I'd be really interested to hear about that actually, if you would like to tell me about that in the comments below. I've had a lot of questions asking to do some videos on validating order blocks and what I consider to be an order block. So I'm going to do something on that next week. It's going to be quite sort of like a abstract informational video because I have some interesting opinions on validating trades and validating order blocks, but I'm really looking forward to making that for you, so make sure that you stick around for that. So yeah, thank you very much for watching. If you have any questions at all, then please refer to the strategy video that I made. There'll be a link to that in the card in the top, but feel free to leave me a comment down below and I'll get back to you as soon as I can. And if you found this video useful, please remember to like, comment and subscribe. Thank you very much for watching and I'll see you very soon.